Hello traders, this is TradeAlerter from ForexSignals.com. Coming to you on Wednesday, the 10th of September 2014. Okay guys, today we're going to be looking at the pound first. You've seen some volatility in the last 3 hours going to Europe. We saw some selling on the back of a new poll which suggested that the yes vote in Scotland was going to win. It was just an internet poll though, and the US traders have come in this morning and they've been a little bit more circumspect about how legitimate that poll is, and they've bought back aggressively. Looks like this 160-150 level may give way here. It'll be the third attempt, and that short covering should be able to push above that. We're watching that, see what happens. The reason why I'm seeing that is that you may see the euro push above its resistance as its short covering is increasing as well. So this little those two pairs usually move in the same direction broadly, and it's coming at the expense of the commodity currencies. If you follow me at ForexSignals.com, you would have seen that yesterday we're trading some Euro Aussie and some Euro Kiwi. Now these particular trades did not work out at all. We saw the market go aggressively higher. Now I was waiting for this sort of rebound to sell at good levels, but that's not always going to be make it safe when you trade. So I sold at the 140 40 level, the market's breakdown point from the ECB. Alright, but we've seen another day of extension here. No real pullback even, no real chance to get out. Ended up cutting around 140, 140. It's been as high as 80. I've got another sell limit. I still believe in the trade, coming in around about 142.50, and so I'll be looking at that level as another chance. Broadly speaking, the euro should, be capped about 130, and the Aussie, even though it's under pressure in terms of its broken trend at the moment, it's usually does well in terms of if it's going to be a broad US dollar trend here, then you expect that the euro is going to do worse than the Aussie over time. So you're just looking for the right level. Yeah. So this is more positioning thing here. This is more just market got too extended, hit some targets, and it's coming back up. The real direction, the real trend, as you can see on the daily here, is been a lot of selling. This is such a big move for this pair in the last 2-3 days since the ECB NFP. But what the ECB done has really undermined the euro going forward, and there's still very nice swap paid on this pair. Yeah, so Euro Aussie, Euro Kiwi is my favorite. Yeah, it hasn't been as punished in the reversal, but definitely I got in way too low there. I was looking for a continuation without any sort of reversal. And the pain got a little bit too much, around 157.25. It's not that I don't want to sell, it's just that right now, when the market's starting to creep up against you and you don't want to lose control of the situation. Yeah. Recently lost control of a pound trade, which just got hit by negative data. Now we do have some reason to be a little bit more bullish about the Kiwi coming up. We're going to RBNZ tomorrow morning Sydney time, and they're probably going to hold. I mean, that's 99% chance they're going to hold. But the fact is that the economy is running quite well. Yeah, and it's going to be. I think what it's going to do is highlight to the market that the New Zealand economy is still 3.5% interest rates. You get great swap if you're going to be buying that pair. They're going to maybe say that they want the Kiwi to fall. They've been saying that a lot, but it's fallen from 88 down to 82. That's quite a big move already. They're letting the market really, the US dollar, do the work for it. All right, so that pair is one which I'm looking to buy soon. September is traditionally a good month for Kiwi as well, if you're talking about seasonals. The pair I don't mind though getting long broadly is the dollar CAD. So if you've seen my trading lately, I've been buying dollar CAD the last couple of days. First time we got out around 110.20 just because it looked like it was stalling. Came in earlier today, we saw the market pull back, bought again, didn't take profit, now it's rolled over again. This is really frustrating. for the bulls, and you can probably see a bigger pullback if we don't get a sustained break above 110, because that's the sort of psychological level there. All right, so if the dollar CAD is to roll over, though, I mean, it's very unlikely that you're not going to see some stability there in the Aussie and the Kiwi as well. So it adds to that sort of credence. If you put all these three pairs in the same block, it's very unlikely that one's going to have a run without the other. Too far. Broadly, they're going to go in the same direction. So you can break the market up into Aussie, Kiwi, and CAD, Euro, Pound, and Swiss, and then dollar and the yen. They're broadly going to go the same way most of the time. So that's what's happening in the market right now. In terms of the dollar yen, it's causing some little bit of issues here. A lot of where's US dollar strength coming from that's been hitting the market so much. It's dollar yen, which is the second largest pair in the market, and it's just relentless buying going on. We broke some multi-year resistance, multi-year downtrends, but still, it's getting a little bit overdone here, and because the yen is such a safe haven that you can easily see a sharp reversal, and the pairs which you've got to be most careful of would be something like the Aussie Kiwi, which will be hit by just general Aussie downtrend that's beginning, and also from that sharp reversal in the dollar yen. So Aussie yen's been up for 10 days in a row until yesterday when it snapped lower. And if we just bring that pair up, we'll see. That's one which gave a warning yesterday that the market was tipping over, because it had such a sharp reversal through some of its major supports. You can see that when you usually see that sort of movement in the market, it could be the start of something a little bit bigger. You don't really want to see 10 days in a row, of one direction with an Aussie yen. It's been more than 10 days if you count this little blip, and so pulling back towards 96 is definitely on the cards here as the Aussie dollar comes under pressure. Aussie dollar is probably targeting 90 cents gradually. It's not something I'll be looking to buy and hold until we get some sort of news that would change the US dollar side, not the Aussie dollar side, the US dollar side. And if nothing changes the US dollar side, then you're probably going to see the trend that started around the markets here continue, and any sort of counter trend is just going to be seen as a relief rally. So now selling back towards 91.80 makes sense. With stops above 92.20. So sort of here, and selling back above there. Stops above there. All right, so good luck with your trading, guys. Today we don't have too much in the way of data. We got the in terms of what's coming out. We're probably going to be next focusing on the RBNZ tomorrow. We're going to look at the statement, also watch the press conference, see what they have to say themselves, and that's coming out approximately 10 hours from now. Alright, so good luck. Come to forexsignals.com, have a chat with me in the trading room if you want to talk about some of the trades I've done or some of the market outlook, and we'll see if there's any opportunities. Good luck.